Good morning, ladies and gentlemen, and hello to everybody watching at home. My name is Shay Russell. I'm the executive producer of mining.com.au. We're going to kick off on time today. Now, today I would like to introduce you to, sorry, I've got to look at my notes. I'm still trying to catch up to the right time zone. Today I'm going to introduce you to Darren Gordon, who is the Managing Director of Centaurus Metals. Now, Darren is going to explain what's happening with his nickel project out in Brazil. Darren, welcome. Applause.
Morning, everyone. Great pleasure to be here. Hope you're enjoying your breakfast. What I want to do is sort of try to keep this reasonably casual, if we can, and really try to get a bit of Q&A going. It's all well and good for me to stand up in front of you and sort of tell you what I think you should know, but it's also good to try to understand what you guys actually want to question me on. I think for Centaurus, we've been working really hard at a nickel sulfide project in northern Brazil. We've recently completed a feasibility study for that project, and I guess the main plan of today is to really talk you through the results of that feasibility study, sort of the next steps for where we're heading with that, and I guess importantly how we look to fund that project. So we've been working in Brazil now for nearly 15 years. We started our life there looking at an iron ore asset and took that very close to going into production before iron ore prices fell away. But what that did is gave us a lot of experience in country. It gave us the ability to go and do a deal with Vale in 2019 to actually acquire the Jaguar nickel sulfide project. That really now is the cornerstone of our business. We are looking to try to build a strategic mineral business in Brazil. We have some other exploration projects that are sort of coming through in the pipeline, but Jaguar really is the central platform to that, and that's really where all of our effort has been focused over the last 4 years. So since acquiring that project, and I guess it was a project that was relatively well advanced. Vale had already drilled 50,000 metres of diamond core drilling. We've subsequently drilled another 150-odd thousand metres of diamond core drilling. We've had 4 JORC resources pulled together on that project, and the latest one of those was in November 22, which was the cornerstone for the feasibility study that we've delivered last week. I'll touch on the size and scale of that, but needless to say, we're pushing nearly 1 million tonnes of contained nickel metal in the resource, with a large portion of that being open pittable and easily accessed. I think the other thing that's quite unique here is that we are in an area in Brazil called the Carajás Mineral Province. It's a prolific mineral belt in Brazil. It's been worked by Vale for over 50 years. So you've got an enormous amount of services, you've got an enormous amount of infrastructure, you've got third generation people working in that region, and it sort of lends itself very nicely to developing new projects. For some of you from the US and Canada, there's Aero Copper in that region, a $3 billion company who have just finished building a 4 million tonne per annum copper flotation plant only 40 kilometres from where we're located. So we've got a lot of confidence that we will be able to build the project that we're looking to build, which is a similar size and scale and a similar processing circuit. The feasibility study has demonstrated very good capital costs. It's demonstrated very good feasibility study costs such that we're in the lowest quartile of operating costs. I'll go into that in a little bit more detail, but it really, I think we've got all the hallmarks for a great project, and now it's all just about putting it all together. There's a lot to digest on that slide, but I think just importantly, top right there is our market cap, and just to focus on that relative to what I tell you about the feasibility study. We've got a market cap in Australian dollar terms of about $225 million. When we've delivered the feasibility study, we've had a post-tax NPV of just shy of $1 billion Australian dollars. So we now need to close that gap. That's a function of the nickel market and where that's gone over the last little while. But as you know, many of you guys have followed Rick for a long period of time, he generally likes the commodities that other people hate, and I think that's very true to this current situation, that nickel's a little bit on the nose, but it's a perfect opportunity to be looking at good quality nickel stocks. So just a high-level summary of the fees. Got a production profile of about 18,700 tonnes of contained nickel per year over an 18-year mine life, just from open pitable sources. The resource that we have does extend at depth. There is, in all likelihood, a very significant underground that will follow the open pits, so feel quite confident that once operational, this project will be there for 30 odd years. The costs are exactly where we need them to be to compete in the market. I can talk to the market in some detail. It's a long-winded subject, but as you may be aware, the Indonesians have supplied a lot of metal over the recent times, and that's put a pressure on prices. In order for us to be a company that everyone wants to invest in, both from an equity perspective but also from a project partnering perspective, we needed to have low costs, and we've been able to demonstrate that we've got that. So we can compete with Indonesia on cost, but then also have the benefit of a very low emission footprint, principally driven by Brazil's access to renewable power on the national grid. I talked to those economics previously, around $660 million US dollars post-tax MPV, which gives us sort of just shy of $1 billion Aussie dollars. And as I said, that's, you know, in my mind, that's the comparison that everyone needs to make relative to where our market cap currently sits. It feels like there's plenty of upside from where we are today. So just briefly talking about Brazil, we have quite a favourable tax system where we're located in that northern part of Brazil, brings it down to about 15%. So that's obviously very fundamental to our economics. It's done for regional development, you know, to support what's going on in that area. It's a relatively poor area, it's a farming country, but it's, you know, where you have mining projects, you have really strong advantages. The other side of that is the royalties. The national royalty is 2% on nickel, which is actually relatively low by global standards, but importantly, 65% of that royalty goes straight back to the municipality where the project is located. So you're getting very good community support, good buy-in from everyone, the job creation is there, and you're not having to fight as a region to get royalty income out of consolidated revenue from the government back to those regions. It's an automatic, stipulated into law that carve out of the royalty stream. But importantly, the power is renewable. It's not the reason we went to Brazil, but it's definitely an advantage that we're going to have moving forward when we compare ourselves to Indonesia's supply. So probably just a few metrics there when you look at where we are going to be on the project relative to other countries and other jurisdictions. Obviously Jaguar in the gold bars there, both from a government royalty perspective and a tax rate perspective, compare very favourably. The dark grey is sort of the low end of the various jurisdictions in Australia and Canada and Indonesia, and the lighter grey is the higher end of those, I guess, tax regimes. But I think the one on the right is what really sets it apart. It really demonstrates why we can have such low operating costs. It's a big part of it, but power is very cheap in country at about 3.5 cents a kilowatt hour distributed to site. So we are investing in a 40-kilometre power line to join to the 230 kV national grid. That's included in the capital cost of the project. But I think, you know, over recent times when nickel prices were being, were being pulled back, and you know, a lot of the Australian nickel sulphide producers were shutting down or going into care and maintenance, you sort of had Centaurus being put into that same camp because there's this mindset, oh, well, all of these projects have got the same cost profile, but that's certainly not the case, and I think it's very clearly demonstrated by the power cost situation that we've got. So when we look at where we are, as I said, that Carajás mineral province is about 150 kilometres across by 100 kilometres down north-south. It's prolific. I don't know whether you guys know that area well, but top of screen there's the Salobo mine. That's Vale's biggest copper mine. They mine about 36 million tonnes a year of ore from there. It's the biggest copper mine in Brazil. It's one of the biggest IOCG deposits globally. Middle of screen, you've got S11D, which is the largest single deposit iron ore, very high grade, 66% material coming out of that. Serra Norte, middle of screen, where the Parapebas and the airport is another very large iron ore mine, the original mine of Vale. So collectively, there's about 150 million tonnes of iron ore that comes out of this region. The dotted line's rail infrastructure that goes out to the coast. The solid line is sealed highway down to where we are on the bottom left of screen. We are quite close to Vale's Onça Puma ferronickel operations. They're currently spending about $500 million putting in a second rotary kiln for their ferronickel operations there. We are about 15 kilometres away from that. So there is already this 230 kV national grid that runs into that project. We're going to spur off that line and take it 40 kilometres across to where our project is. Really right down the bottom left is where Aero Copper have just finished building their 4 million tonne per annum copper float plant. They did that project in about 20 months. They turned first dirt in September 2022 and they've already started to produce first concentrate. So it gives us a lot of confidence that the sort of size and scale and the nature of our processing circuit as a 3.5 million tonne per annum float plant for nickel is going to be able to replicate what was being done there. We really want to take the cookie cutter approach, don't try to reinvent the wheel too much and try to copy as best we can what they've done and do it for a similar capital cost. As you can see from the Google image, it's farmland, cattle grazing country. Those two cities there, Tucumã and Alanja do Norte, are about 35,000 people each. So you get very good buy-in, and those towns are really filling up right now between what Vale are doing with the expansion of Onça Puma, but also what Aero Copper have been able to do with the build-out of their project. So I've talked to some of these points before, but just trying to summarise them all on one page. Oh, sorry, I'm looking there, not out here. No problem.
And secondly, I'm not hearing a lot about your creation of demand for, I assume, what we call clean nickel. And in this market that's getting flooded with cheap resources, even subsidized, I mean, to basically capture the market and close everything out. What do you do to capture those companies or jurisdictions that want to create
Yeah, sure. I'll just repeat that question sort of for the online audience as really a point around talking a little bit more about the market for clean nickel, how we can differentiate ourselves from what's happening in Indonesia, which is being sort of supported by the Chinese in their processing capacity. I think that's a fair reflection. Yeah. Yeah, sure. Yep. So I think there's a couple of aspects to that point, and we've looked at Indonesia a fair bit, obviously, as part of how we think about our project. And it's been sort of really important to compete on cost in the first instance. And I think the extension of that is then how we deal with potential project partners coming into the project. So all of the conversations that we have had with project partners are looking for, those groups are looking for nickel supply that allows them to diversify away from Indonesia. I think it's fair to say that you can't completely remove yourself from Indonesia, otherwise you just won't have enough nickel supply to meet the demand that is going to be there. And I think the other side of that is the demand side, and we've seen up until now the gigafactory rollout for battery materials in the US and the EU has been a lot slower, and the take-up has been not as quick as what some pundits might have thought would be the case. So what we're seeing now is a little bit of a catch-up where you've had this oversupply of nickel coming from Indonesia and an under sort of demand type curve, and that's what's impacted the market. But when you look at some of the things that are going on in Indonesia right now, their costs are going up. There's been mines being shut down in Australia. There's been mines that are being shut down in New Caledonia. So you do get to a point where the pricing of nickel right now feels like it's probably very close to the floor. Indonesia does a lot of things outside. They've had a very big nickel pig iron industry that's gone into the stainless steel market. Some of that nickel pig iron now is being converted into matte and then into nickel cathode, which is being delivered to LME contracts. And I think there's now 3 Indonesian Chinese consortiums that have now got their nickel products accredited on the LME. So the LME is all about trying to increase volume, so they're happy to have this volume come into the market. And so you've seen some of that supply, and that's what's also put pressure on that headline LME nickel price. Up until now, there's been no real distinction about what the quality of that is from a carbon emissions and, I guess, overall ESG footprint perspective. And so I think that's where the pressure is going to come to bear. I think there's going to be more impact. I don't necessarily see that there's going to be a green premium for nickel as such, but I do... Sorry.
And that green premium, is that imminent, or is it something that's going to come on?
I might just step in here. We'll finish the presentation and then I think we'll do a Q&A because these are some great questions, but we risk getting a little off topic and finishing late. But they are really good questions that I do want to touch on. But we'll just finish the presentation for the moment.
Yep, but what I would just say is that I think the green premium will take different forms. I don't think it's an uptick on price. I suspect it's more likely to be a lower cost of capital to get your project funded. It's going to be getting a partner to come in at the project level that plays close to NPV on your project value, as opposed to a lesser quality project from an emissions point of view that might actually have a higher cost of capital. So I'll keep working through this just for the time being, and we can circle back with those other questions. All the statistics are there, but I think one thing that got missed earlier in the year was that the key environmental licence for Jaguar was granted to us in January, and that was really right at the crux of when the market was on the nose, so to speak. So I think those sort of de-risking steps go a long way to getting this sort of project up and running. So when you have a combination of the resource, you have a combination of the costs, and you have a combination of the emissions footprint, then there's not too many better projects globally for nickel than what Jaguar is. So just touching on the resource, as I said earlier, it's about 1 million tonnes of contained nickel metal. Of that, we've converted 460,000 tonnes of that to reserve, so that's now a JORC reserve. But that reserve is just on the open pittable material. We have mineralisation that starts 5 metres below surface, but we've also hit mineralisation down as deep as 1,000 metres deep in some of the deposit areas. We would expect that the size of this resource grows. We've completed 50,000 metres of diamond core drilling in 2023. That is not reflected in the resources yet, and I think the size and scale of this project will continue to grow. But when you look at it compared to, I guess, the big nickel camps globally, we stack up pretty well. We've got relatively high grade for a relatively large deposit, and that again is a little bit of a rare beast. The operating costs, you can pick the way that you like to analyse it, whether it's $1 per tonne milled or whether it's $1 per pound of nickel in concentrate. We've now got $3.57 per pound as an all-in sustaining cost. I think the processing cost is the standout. That's partly driven by the power that I referred to before at 3.5 cents a kilowatt hour. But I think the other side of that is, being in Brazil, most of our costs are in Brazilian reais. The currency is favourable when you're bringing all that back to US dollars, so you will have low operating costs, and I think you could probably look at most projects in Brazil and find that they will have relatively low operating costs as a result of the currency side of things. When you put that on the overall cost curve for nickel, you can see we're down in the lowest quartile. That is obviously very important, particularly for our partnering discussion. All of the groups that we've been talking to about offtake has been about, well, you need to be able to fund the project as well. Their response to that is, show me that you are going to be operating costs, show me that you are going to be in the market all the time, so that if we do have spikes or drops in nickel prices, that you will still be able to weather the storm. And I think we've been able to demonstrate that very clearly. The first half of that bottom quartile is Norilsk, who has negative cash costs because of their PGE credits that they get as a byproduct. I think we are in a very, very good position. There's not too many projects that are able to compete in respect to their cost. Capital cost-wise, $370 million US dollars. I think that compares very favourably to what Aero Copper have reported in the market about their recent build. Gives us a lot of confidence that we can actually go and put this processing circuit in place and do it in the sort of time frame that they were able to. The mining picks up waste movement to build the integrated waste landform, which is your tailings dam. The non-process infrastructure picks up the 40 kilometres of power line that I referred to earlier. So we do have some costs in the capital side of things that enables us to have lower operating costs, and that I think is still important when you've got an 18-year project life that's likely to grow beyond that with the underground at a future point in time. Capital intensity, again, lowest quartile of undeveloped nickel projects. We're very happy with that. And then importantly, on the emission side of things, I think, to the gentleman's point before, is it's important to have the low emissions. It's not the reason we went to Brazil, but it's only 7 tonnes of carbon for basically your site costs plus all your freight plus all of your downstream, puts us in a very good position in relation to that. So, as I said, I can't guarantee you that there's going to be a higher price paid for our nickel because of that, certainly not in the next few years. But it is something that's going to make off-takers look at this product very favourably, and it will become a natural hedge against some of their supply that they might be sourcing from Indonesia. We've run all the economics at 19,800 a tonne. We think that that's a very comfortable long-term price for an 18-plus year project. We've also run it, obviously, at today's prices around $17,000 a tonne, and still has very strong economics. I don't think there'd be too many projects today in nickel that could say that they could work comfortably at current spot conditions. And just to the upside in the mine, those pits there at Jaguar are about 3 kilometres long. The Onça Preta is a little sort of more discrete ore body, sort of about 1 kilometre away. But you can see the high-grade mineralisation that sits just below the pits. So there's about 225,000 tonnes of nickel in the resource, which is not included in any of the economics of the feasibility study. It's the underground that we will look at some point in time in the future, but we don't need to do that for what we're dealing with now. So looking at the overall timeline, the biggest piece of that puzzle right now is going through the funding, and I think one of the key messages that we have there is that we are not going to go and dilute shareholders by funding our equity component at a shareholder level. I go right back to the start where we had a market cap that doesn't really, or in my view, isn't really reflective of the value of the project. Until that gap closes, that doesn't make any sense. We've had a lot of conversation leading into the feasibility study and during the course of the feasibility study to, have parties get involved on the offtake. That offtake, we're saying, will come with funding. That funding will have a much better look through to the project values that we've demonstrated in the feasibility study, and we're now working with Standard Chartered Bank to have a more formal process, which should kick off towards the end of July. There's a lot of NDAs that have already been signed. We know that there's a lot of groups that are interested in this, so you can see that the equity component of any capital cost here is going to be funded at a project partner level. From there, we can then go and source the debt that we might need to fill out the capital build. But I'll reiterate, as a large shareholder myself, the intention is not to go and dilute shareholders excessively in the process of building this project. Get that funding sorted out. Hopefully we have term sheets that are binding towards the end of the calendar year. We need to get the second stage of the environmental approval process, which is an installation licence, which is due by the end of the year. The mining lease, which we've already got the technical approval of, will come about 2 to 3 months after that installation licence from the Environmental Agency. So with all of those things, we're looking at a sort of second quarter, hopefully April 2025 date for final investment decision. If we can do that and we can replicate what Aero Copper have done and have sort of a 20-month build, maybe it's a bit longer for us as a newbie into the world, but we allow 2 years for that, and we should be in production in the second half of 2027. And for us, we feel that's a good position when some of the supply-demand dynamics have sorted themselves out in relation to the nickel market. So if you sit here today and look at where nickel's going, I suspect that when we look in a couple of years' time, we're going to be in very good position. So we looked at this at the start, and I'll just summarise by saying we've got a very good asset. It's got a good production profile. The costs are low. We're in a good location. We've got the people. And I guess the job now is to try to close that gap between price and value, and that's what we're trying to do by sort of presenting the feasibility study in further detail. There's your QR code if you need it. Thank you very much.
Thank you very much, Darren. All right, we've got 15 minutes for Q&A. Sir, at the back, do you still have a couple of questions? Because I've got some, but I really liked your direction.
Well, yeah, I mean, the whole point is how fast we get production and how much is your parts. I think everybody hears me.
They can't hear you online.
Oh, okay. Well, how fast you get to production is one of the salient points. Obviously, power and things like that are very advantageous, but securing customers without giving away too much of the upside is very critical. You've got to go in and looking for what your strategic plan is to capture that, level of customers, your anchor stores.
Yep.
If I go to retail.
Yeah, I sort of touched upon that just before you came back in. So we do have ongoing discussions with a number of parties. We are now running a formal partnering process with Standard Chartered Bank, and with that we would expect that we would sell down a minority interest in the project, maybe somewhere between 25 and 40%, but do that at a much better look-through valuation compared to where our market cap is. So we'll be using the feasibility to guide that valuation, and that's going to give a much better result for shareholders by doing that.
Do we have any other questions? I'll pass the mic around, or I'll take over.
Can you help us understand, for the capital that you need to build a mine eventually, who is going to be in charge of looking for those funds, and what experience do they have securing that amount of capital?
Yeah, I guess, the buck stops with me in relation to that. I've been involved with a number of projects before, some that are actually a fair bit bigger than this, and one of those was involved in bringing a partner in to a project. So I'm very comfortable with the process that we're on. I'm very comfortable with Standard Chartered and the work that they can do for the potential customers that we're after. So there is still an enormous amount of demand at what I call a strategic level, which is probably not reflected in equity markets right now. So when the price down, equity markets go a bit quiet for nickel. That's certainly not the case when you're talking to project partners. There is still hotly contested nickel, and if you look globally, there really is very few nickel sulfide deposits that have unencumbered nickel units. And when I say unencumbered, I'm saying most nickel units are already accounted for with some form of off-taker. We've made that conscious decision last year to buy back the off-take rights that Vale had when we entered into the initial acquisition of the asset. And we wanted to do that so that we had the ability to, in effect, trade those off-take rights to get funding for the project. So we've already had a lot of conversation with groups along the way. I feel very, very confident that we'll get a good result as we run this formal process over the next 6 months. And that's the team that we've already got on the ground, both in Australia and in Brazil.
Let me come.
What portion of your market do you think is going to be the steel end of things, and what portion is going to be battery metals and technology portion? And does your anticipated quality, make a difference in what market you're going after?
Thank you. Look, I think we would expect that most of our production will be going into the battery market. It's possible that it could go into the stainless steel market, but there is already so much supply servicing that out of Indonesia with nickel pig iron and ferronickel. So to have a sulfide concentrate, you are so much better orientated to try to direct that into the battery market, and that's sort of where we're looking. I think there's one more slide here. This just looks at the theoretical rollout of gigafactories in the US and the EU, and it's probably not kept the pace that some people thought they would, but those green dots on there are, I guess, gigafactories that have nickel chemistry still, and if any of that the demand side comes through, then you are going to see a lot more nickel being required for the battery market. So we are in a very good position right now with these unencumbered nickel units to tap into the groups that are looking to supply either PCAM or CAM or sulfate into these battery markets. So when you look out to 2040, the amount of nickel that is going to be required at that point in time, it's like 80 Jaguar mines need to be found over that period of time. I can tell you they don't exist because they take a long time to find nickel sulfide deposits. Some of that will be supplied by Indonesia, but again, we have that benefit of the low carbon footprint to benefit what we're trying to do. So even if that is only 25% right, there's still a lot of new nickel mine and nickel supply that needs to be found over the next little while to service what is still going to be a growing EV thematic.
Hello, quick question. I'm not sure, recently I learned that some mining companies have tried to get permits and not brought in the right people, communities, stakeholders into the fold when they're trying to build a road. And I'm just wondering, when you eventually do go into production, who will you need to kind of incorporate? Will you get help also for any infrastructure expenses that you will need? I'm not sure if you need any roads or power or anything like that.
Yeah.
If you can address those, thank you.
Yeah, look, I guess we'd like to take a fair bit of pride in what we've already done to get to this point. So we had this preliminary license that we got in January just gone, was really the approval of our environmental impact assessment document, which is 2 years of data collection, a whole bunch of information. It's bringing communities along for the ride for them to understand your project. The last piece of that puzzle is to have public hearings in the local municipalities, and there's overwhelming support for the project. And I guess I hark back to that royalty split. That's a very big financial incentive for communities to want to actually see mining projects get up and running, particularly when you look at the other industry in the area. It's principally just cattle grazing. So you put a new mine there, it brings a whole lot of new wealth into those regions. Those municipalities are crying out for that. And I think that's also partly reflected in the tax rate that you have. That's all for these more remote regions to incentivise investment into those regions. So there's a number of factors that are already at play with government. Bruno Scarpelli, who's our country manager, he heads up all of our environmental approvals and community consultation side of things. Done a fantastic job to this point, but he will be the lead that goes through to the next phase, and he's on the ground in Brazil all day, every day.
Go ahead.
Thanks. I'm not that familiar with the nickel market, but is there a premium now for clean nickel versus the nickel coming out of Indonesia? Did there used to be one? And going forward, as the gigafactories of the world get built out, do you foresee a premium?
As I said, I'd like to think that comes. There's been a lot of talk, even by Australian producers. Andrew Forrest, for example, has bought a nickel sulfide mine and is crying out for the LME to change its criteria for how you supply nickel into those warehouses. But they've balked at that because right now the LME is about trying to lift volumes. You would have seen that spike that happened 2.5 years ago, where nickel went to nearly $100,000 a tonne on short covering, and then it got bailed out, and that nearly brought the LME for nickel undone. So since then, they've all been about trying to lift volume into those warehouses, and so they've sort of accredited supply quicker for products coming out of Indonesia. It doesn't really have a full, ESG footprint that goes with that, and so we're certainly not seeing green premiums right now. I think it'll end up being a direct conversation with your end user as to whether you see anything like that, but I do expect it's more likely to come from a cost of capital type conversation as opposed to a direct premium on your product.
Do you think that might change with the new Labour government?
I don't think so necessarily. I don't think so. I think it's sort of bigger and broader than that. So time will tell, but it's I suspect it'll be driven by the market. The market will say, okay, well, you've got to compete on cost. And that's really what we've tried to do all the way along here, is say we've got to be able to compete with the Indonesians on cost. And then we can shoot the lights out in relation to carbon footprint and our ESG credentials. And hopefully that gives us some form of lower cost of capital associated with building that project compared to something that might be looking for funding in Indonesia.
Hi. Could you go back to the resource? I have a question about the metallurgy as far as you'd mentioned potentially of going underground and using higher grade to blend in, and metallurgically as you increase grade, generally the recovery curves increase. So how much of that is not quantified in the current economics, and how soon, is that something you plan on doing while you're undergoing project financing, exploring what the economics look like, as it could potentially, you'll be feeding higher grade, blending it, but then your recovery curves could go from hypothetically 70% to 72, 73, and how does that affect the long-term economics?
Yeah, no, look, it's a great question. I think, our project is relatively sensitive to recoveries. You would have seen that on the sensitivity charts. It pretty much speaks directly to revenue, right? And the reserve grade's like 0.73%, that's in the open pits. That mineralisation there is sitting at nearly 1.5%. That will have a big bearing on the recovery of nickel there, because you've got a fixed component of non-sulfide nickel that you will never recover. And so, we've allowed for all of that in our resource and reserve models. We've allowed for that in our open pit designs. I think, this mineralisation at depth, we'll do the underground studies on that. We just didn't want to complicate the feasibility study. We wanted to get those numbers out so that we could start these partnering conversations on the funding side of things. I suspect that this underground material is not coming in year 18, but it's probably also not coming in between year 1 and 5. So we'll do the work, we'll understand what it is, we'll work out whether we've got to drill it at a tighter density or not. We'll look to bring it into reserves with a solid underground study associated with that. But I think there's other opportunities outside of what we're looking at in underground, just to tweak and improve the mine plan so that we can actually get higher grade, lower strip, maybe more production in the early parts of the project life, and that we'll do that work prior to making investment decision.
Morning. Beyond your ability to execute on time and budget of this project, what do you need to believe for this to be a great investment? I suppose that mainly turns back to, for instance, the EV story that you had there. What's the outlook that needs to play out, and what are the risks around that? For instance, sort of other chemistry and batteries, etc.
Yeah, look, I still look at the best opportunity here is around the operating costs. There's not many projects like this. I think the biggest piece of the puzzle for shareholders today is what is the look-through for us to be able to fund the project. If you've got a belief, which I do, and I have a very strong belief that we will fund the project through a partnering type situation where we use our offtake to leverage that, and we're not coming back to the market for a big chunk of equity that's going to dilute shareholders, then you can sort of look at our share price and the value that we are today from a market cap point of view and go, there really isn't much floor. If you believe that $17,000 a tonne nickel is close to the bottom, you understand that supply side dynamics, and then you also say, okay, well, the things that Centaurus are doing to close that gap on that funding, if that's going to happen and we have clear line of sight in the next, say, 6 months on what the term sheets or what that partnering process is going to be, then I think there's enormous upside from where we are today, where we close that gap between our price and the value. And you know, the look-through, in theory, is going to be at a much higher price than where our share price currently is today.
All right, ladies and gentlemen, we have time for one more short question because we've been given the wind up. We've got to cut it short for everybody watching. Not cut it short, finish on time for everybody watching. Great discussion today. Do we have one more quick question we can sneak in? We're all out? Going once, going twice. Listen, Darren, this has been a fantastic conversation today. I've thoroughly enjoyed it. All the questions I had here written, guys, just so you know, have been made redundant. Excellent questions from the crowd. I think when it comes to thinking of nickel, we need to put our long-term hats on as well, and just remember there was a time when uranium was extremely unpopular in the market, and nickel unfortunately finds itself in that predicament right now. I just want to say, Darren, thank you very much for today's presentation, and I hope you all enjoyed breakfast.